Alrighty, so I am Tim, the CEO and co-founder of CoinFi, and a little bit of background about myself. I started in institutional finance. I've been working there for 15 years before moving over to cryptocurrency. I started my career in Goldman Sachs before moving to the hedge fund space. And now I'm the CEO and co-founder of CoinFi. So today, I'm going to talk about a couple of things. I'm going to teach everyone something, if you guys are all invested in Bitcoin, something actionable that you can take away, that you can do in your trades, which will help you increase your returns in Bitcoin. So I'm going to show you how a professional trader would structure a trade versus how a retail trader would structure a trade. I think a lot of you in this room probably have invested in ICOs last year in 2017, and that was obviously the big trade last year which made a lot of money. I'm going to make a prediction on what I think is going to be one trade that people are looking at this year, some of the institutions are looking at that not many people are talking about. And then I'm going to also describe for some of the people who have invested in ICOs some of the data that we've run at CoinFi, which tells us quantitatively when is the best time to sell your ICO. And then I'm going to talk about some advanced token metrics, which actually looks at what are the largest holders of some coins and what are they doing and how that can actually help you increase your trading returns. So I think many of you in this room are bullish on crypto, like myself, think we're at the start of a structural bull market. And the standard way a lot of people invest is to buy Bitcoin and hold it, or hodling. And that's the standard way a retail trader would put a trade on. And I want to show you shortly how a professional trader can use some structured products and do it in such a way that you express the same view, but you actually increase your returns by up to 51% a year. So for example, a retail trader, Sorry, I have to make sure I'm advertising for hybrid, so that's very important. So for the retail trader, they would buy Bitcoin, and they would effectively hold it, they'll put it in a cold wallet, and effectively, if you're buying 10 Bitcoin, then effectively you have 82,000 US worth of exposure. The way an institutional trader would do it via a structured finance trade is they would take that 10 Bitcoin, they would move it onto an exchange like Bitfinex. They would actually sell 7 of that Bitcoin into USD and then loan out that USD. So this is the quote-unquote kind of difference where you actually have a USD loan at the same time of 57,400 and lend it out. And last year, the lending rates for USD on the exchanges was about 50% a year. This year, they're coming down, but you're still annualizing about 20 to 30% a year. And then the difference is they take the remaining and then they transfer it to a futures exchange like BitMEX and then effectively buy the same Bitcoin exposure in futures. So the difference is you have a futures exposure, you have a loan, a USD loan you're lending out with an interest rate, which is going to increase your return. So 1 year later, let's say Bitcoin does end up doubling. In the first case, with a retail trader, they would make 100% ROI. But in the case of doing it in a structured product way, you would actually get a greater return because you have the same futures, you have the same Bitcoin exposure via futures, but you also have a USD loan and you're collecting interest on it. And when you add all of them up, in USD return, you get 151%. So I think many of you who have been in crypto for a while noticed last year in 2017, a lot of people could do what's called manual arbitrage trades, where you buy on one exchange and then you sell on another and make a profit of up to 30%. But you've probably noticed this year that the market's very different and it's pretty much impossible to do these trades. And the reason is there's a lot of professionals coming in, everything's getting automated like the equities markets. And effectively, it's the computers coming in and trading automatically. So I think this is going to continue, and in order to stay competitive, you need to be one step ahead of everyone else. So if you look at the current state of the market, a lot of the quote-unquote funds that are investing, effectively 90% of them are investing in ICOs, so they're ICO funds. And then this year has been challenging where there's less deals, each of these funds are getting low allocations, and there's more funds coming into the space. So effectively, you can do the math. There's a lot of residual cash left over that's uninvested. And what I would ask everyone is, if you look at the equity space, how many funds do you know are IPO funds, the equivalent of ICOs in the equity space? Predominantly, all the hedge funds or mutual funds in the equity space, they have a core strategy, whether it's a quantitative strategy or a macro strategy. So I effectively think that this year, a lot of the ICO funds have a lot of additional cash to deploy. And one of the strategies that's very popular in the equity space is a strategy called activist investing. So what is activist investing? Activist investing is when an investor takes a large position in a listed company and effectively jockeys the management and pushes the management to make changes. And the most famous case of this is Carl Icahn, who's a very famous activist investor in the eBay example, where he effectively bought a stake in eBay. The day he bought the stake, the stock price rose 8%, and he's encouraging eBay to strip off PayPal, their most valuable asset, into a separate company. And he's jockeying the management to do this. He's contacting the media, making a lot of noise about it. And effectively, the company in the end listened to him. PayPal spun off, but during that time, the stock rallied 39%. So I think a lot of these strategies will be coming into the cryptocurrency space. So I'll ask you a question. What happens with all these funds with excess capital that they're unable to deploy, that they're getting pressure from their investors to make returns? And effectively, if they own 50% of the supply of tokens, equivalent to activist investing, they can start pushing the company management for a lot of these ICOs to start making changes to their token model. They may encourage them to do more staking. They may encourage them to burn more tokens or even do airdrops. So again, I think it's really simple math. At the end of the day, a lot of ICOs last year have raised, say, $20 or $30 million for 30% of the supply. Because we're in an extreme bear market, a lot of these ICOs have effectively dropped 80 to 90%. And their market cap now is just $3 million. So let me ask you, these funds with excess cash, are they going to be looking at deploying perhaps $1 million, $1.5 million to buy up half the supply and effectively use an activist strategy to encourage the founders to make changes to their token model? So I think one of the big trades this year is going to be some of these funds screening, similar to value investing, looking at these undervalued ICOs, going in, buying at size, and trying to make changes to some of the token models. So at CoinFi, we've ingested a lot of the pricing data and ICO data, and we've run a lot of data reports, and we've determined that on average, 85% of the time, the most optimal time to sell your ICO is actually on the first day. And if you look at a couple of specifics, for example, this is Chain, you can see even depending on the hour you sell the ICO has a huge difference in your returns. So if you look at Chain in the first hour, you look at 22.9% return, all the way down to, in the fifth hour, 11.4 times. So this is absolutely crazy to me in the cryptocurrency space that people don't detect this automatically, because in the equity space, everything is done algorithmically and automatically. And I think the first phase, you're going to have these tools coming out which detect when coins list on an exchange, so people can transfer very quickly and start unwinding. And then I think the next phase after that becomes automated and arbitraged out, similar to the arbitrage trades last year. People are going to be coding automatically in a smart contract. When they receive the coins, they're going to be transferring automatically to the exchange on IDEX and unwinding the position even automatically in the market. So it's going to get more and more efficient. You need to be faster and faster. One more thing from the equity space, which I think maps into the crypto space, or mutual funds and hedge funds, one thing everyone looks out for is what are the insiders doing with their stock positions. So is the CEO buying or selling stock? Are the top 10 investors increasing or decreasing their positions? And again, this applies in the crypto space with coins. So all this information is publicly available on the Ethereum blockchain, but no one's ingested this and analyzed it at scale. And what is quite interesting is when a founder is moving coins out of their wallet, that's something investors should know about and get automatically alerted. When a fund is transferring tokens onto an exchange, that's a strong indication that they're going to be unwinding their position. And one thing also, I think it's relatively known that ICOs effectively have to pay a large listing fee right now to list on some of the larger cryptocurrency exchanges. And it's generally public knowledge that what is the US dollar notional amount for these listing fees on the largest exchanges. And what's interesting is if you look, and we analyze this, I had to blank out some of the information, but if you look at this transfer, the number of coins, 42 million, happens to match exactly the notional amount for the listing fee for that particular ICO, and 3 weeks later, that ICO lists on one of the large exchanges. So all this information is publicly available, and people should be analyzing this. So in conclusion, market is going to get more and more competitive, so you do need the right tools to stay competitive in this space. And I think the big trade this year that not many people are talking about is some of the funds are going to be deploying their additional capital into these ICOs and do some type of activist investing. If you guys got any questions for me, you can join our Telegram, t.me/CoinFi. Tag me with any questions, and then I'll answer them, or I'll hang around the stage at the end. Thank you very much.